Okay, so on February 5th, 2021, Hindenburg Research came out with a report titled Clover Health: How the King of SPACs Lured Retail Investors into a Broken Business Facing an Active, Undisclosed DOJ Investigation. So, obviously, this is a pretty hot topic right now, especially because of what's been going on in the retail investment world. So, really, my goal for this video is to take a pretty long report that Hindenburg wrote and try and distill it down into what I'm calling three main points of sketchiness. And when I say sketchiness, what I mean is basically common themes within the report that at the end of the day makes Clover not look so great. In addition to the 3 points of sketchiness, I will also be covering Clover's responses, and at the end of the video, I'm going to give my overall opinion on Clover stock, whether or not I think it's worth investing in, and just kind of my general analysis of the business. So before I move any further, I would like to say that number one, I don't own any Clover stock currently. I don't really plan on owning any of Clover's stock, and really any sort of analysis that I've done in this video is primarily for educational purposes. Obviously, the report is a lot to cover, so my goal with this video is to hopefully make it a lot easier to take that information as an investor, distill it down, and then make a choice yourself. And last but not least, before I move into the video, if you find today's video valuable, please hit that like button and hit the subscribe button below. Okay, so before we move forward, I think it's important to give a quick background on number one, who is Hindenburg Research, and number two, who is Clover Insurance. So let's go ahead and start with Hindenburg. So Hindenburg is a short selling firm where basically their goal is to perform research, dig up dirt on certain companies, figure out whether there's fraud happening within a company or any sort of basically illegal activity, and then publish a report covering all of that. And really, I guess it's for a couple different reasons. Number one, to inform the public. So if you're an investor, obviously if that stuff is happening, I mean, it makes sense that it would be put out in the public for your knowledge. And number two, again, if they're taking short positions on these stocks, it makes sense for them to publish these reports so that they can financially benefit off of the price of the stock going down. So now a little bit of background on Clover Insurance, and I'm using my notebook today just because there's so much to cover. But Clover Insurance is an insurance company that uses proprietary technology called the Clover Assistant that PCPs or primary care physicians use in the doctor's office to basically help them make better decisions about care for a certain patient. The technology claims to use machine learning to take a bunch of data and provide recommendations for their treatment. They claim that by helping doctors make those decisions, that will allow them to share superior economics with their members, and then basically allow them to lower the cost and give better benefits for their insurance plans. All right, now that we've gotten the housekeeping out of the way and the boring stuff out of the way, it's time to get into the juiciness of this Hindenburg article and get into the three different sketchy areas that I've identified within the article. And basically what I did was I read through the entire article from start to finish, and I tried to group all of the allegations that the article was making into three main segments. So the first main segment is how the doctors actually interact with the Clover Assistant, the incentives that they're given, and at the end of the day, whether or not the Clover Assistant itself is helping the doctors make better decisions for their patients. So the way that it works is that as doctors are diagnosing their patients, they will use the Clover Assistant to help them make decisions. So let's say that there is a patient with diabetes, and the patient comes in, the doctor's diagnosing them, and they're going through their little checklist, and they have Clover Assistant pulled up. And what they'll do is they will click through different areas within the assistant, basically saying, okay, was this person experiencing symptom X, Y, and Z, or did this show up on their chart? Basically what the assistant is then doing is taking all of that information, taking information about patients' past history, and taking data from their broader data set, and then giving the doctor recommendations to provide care for that patient. And the goal with the assistant is to provide an overall better level of care for the patient, allow the doctor to almost have this checklist built out for him so that he's not forgetting anything, um, which will then, like I said, give the patient better care. So let's talk a bit about the incentives that Clover gives to doctors to use the Clover Assistant. So based on the Hindenburg article, it was pretty clear, at least from the doctors that Hindenburg had talked to, that um, not all of the doctors actually found the assistant to be valuable. And the main reason why they were using it was because for every visit, for every patient visit, Clover is actually paying them $200 to use the Clover Assistant per visit. And there are obviously a couple reasons why, at least to me, that's pretty sketchy. Number one, if I have to pay somebody to use my software, that's generally not a great sign in terms of, okay, does this piece of software actually solve a problem for this subset of people? And number two is that, if I'm getting paid $200 to use this software platform every time a patient comes to me, then even if I don't find it valuable, I'm just going to use the software platform, click the different buttons that I have to click, go through the processes, and then get my paycheck at the end of the day. So really, to me, it doesn't really give the company Clover true data about whether or not their system is valuable, because again, like I said, if I'm just getting a paycheck, I'm just going to click the buttons and do what I need to do to get the money. So Clover did come out and respond to the $200 incentive issue, and basically what they said was that they believe that the $200 is a reward for the doctor for giving good primary care that is data driven. I'm not sure if I completely buy that answer, but I guess it's fine. And then regarding the overall doctor, whether or not they find Clover valuable, one thing that they did come back and mention was that their NPS scores for the Clover system were actually, I believe it was between 55 and 63, which is actually a pretty dang good NPS score for the healthcare industry. I should be putting up a graphic here that shows NPS score by industry, but I guess overall it does show that there is general satisfaction with the Clover system based on the NPS scores. Okay, so sketchy point number 2 really covers some relationships that Clover Insurance has. So I'm going to cover 2 relationships. The first relationship is between a brokerage firm called B&H Assurance that's actually owned by the Clover, I believe it's their VP of sales owns that firm. And then the second relationship is basically what ended up being a subsidiary of Clover called Seek Medicare, which claims to provide unbiased Medicare advice to seniors about insurance and insurance companies. All right, so B&H Assurance is an outside brokerage firm that is actually owned by Clover's VP of sales. And according to the Hindenburg report, they are claiming that this B&H Assurance outside brokerage actually accounted for, it says they're claiming about 68% of sales. And if that's actually true, that's a huge chunk of their sales. It would make sense that that'd be a huge problem. But I believe that Clover's response to this problem was actually pretty decent. They said that overall, to this date, they've paid B&H about $160,000 directly from 2017 until now. I don't really know how directly is defined. I guess they could have paid more indirectly, I guess you could say. And then of their current client members, 8,200 were referred by B&H. And those 82 members are roughly 14% of their total membership, which isn't a small number, not a huge number, but not a small number. But they at least came out and told us those details about it. But at the end of the day, why I thought this fell into the sketchy category was, anytime you have a high-level employee having some sort of conflict of interest with another company, to me that raises a red flag, and I'm glad that Hindenburg brought it up within their report. The second relationship, which is pretty sketchy to me, is the relationship between Clover Insurance and Seek Medicare, I believe it's called. Yeah, Seek Medicare. So Seek Medicare, what Seek Medicare is it is a separate website that basically provides information to seniors about certain Medicare plans. And the whole goal of the site is to provide unbiased information so that the seniors can make the best decision possible, choose the best insurance company possible for their specific situation. To me, this is insane because, you have this company that's claiming to give unbiased information about insurance, and they are a subsidiary of an insurance company. Like, that's insane to me. Like, I don't know how you can be unbiased in any way, shape, or form. And Clover's response to this was, I mean, it was okay. I don't think it was super great. Basically, what they said was, yes, okay, even though Seek Medicare is, I guess, I don't know if they specifically said subsidiary, but it is listed as a subsidiary in the SEC documentation. But even though they are associated with us, they operate as a fully independent company with fully independent outside investment. And the only thing that we do to interact with them is I think that they might have one board member from Clover on the board of Seek Medicare. Again, I think it's kind of BS. I don't really know how you can be unbiased when you're owned by an insurance company. That's just my opinion. All right, so the third area of sketchiness is that, at least according to Hindenburg, Clover software directly encourages upcoding. And I'm going to go ahead and throw up the definition of upcoding here because I'm not sure if everybody's heard of it. But basically what it means is that basically what you can do as a doctor is say a patient is essentially sicker than they actually are or has a diagnosis that they actually don't have. And what that will do is then when you send all that information back to the insurance company and then they send it to the government, because as we mentioned before, Clover is a company that primarily works with the government. They work with Medicare. I believe it's Medicare Assurance, Medicare, what is it here? Medicare something. Advantage, yeah. Work with Medicare Advantage, and basically the riskier the patient is, the more Medicare Advantage will pay out to the insurance provider to cover any sort of issues that they had to pay for. So at the end of the day, riskier the patient is, the more money the government will pay the insurance company. So now let's get into how the Clover system, I guess, actually encourages this upcoding. So at least according to Hindenburg, the doctors would go in, they would diagnose the patient, and then all of these older sort of issues that the patient had would start coming up as a potential diagnosis. So let's say that they had a hypertension earlier on in their life or something like that, then it would pop back up. The doctor could just say yes or no. Do they have this? It might be pretty easy to say yes. So really the key point here is not only does Clover capture those older diagnoses, but they actually make it really hard to remove those from the system. So you can imagine as a doctor, if you're frustrated, you can't get rid of this old diagnosis, you may just click yes. I'm just going to click yes to get out of the screen. And Clover did come out and respond to this issue, and basically what they said was that if a doctor decides that a certain diagnosis is not relevant, it will not show that diagnosis for the rest of the calendar year. And that answer makes sense to me, but then they go on to say that basically they won't show the answer for the rest of the calendar year unless certain circumstances warrant showing that diagnosis. So I don't really know exactly what that means to me. It feels very broad, and there's area for opportunity for them to essentially show these diagnoses to the doctor within the calendar year, even if it's not really relevant to the patient at that point in time. So that was our third point of sketchiness. So at this point, you know who Clover is, you know who Hindenburg is, you know my three areas of sketchiness, which were how doctors interacted with the Clover system, whether or not they found it valuable, a couple of Clover's relationships between B&H Assurance and Seek Medicare, and then the third point, which was whether their software inherently introduced more upcoding risks, which it claimed to solve. So now I'm going to get into kind of my quick and dirty analysis of Clover just as a business and whether or not I think that it's still maybe a good investment at this point if you're willing to take on the risk. Okay, so when it comes to Clover's business model, I really had sort of three main questions here, and I have the growth model pulled up on the screen, and we'll get into that in a second. But the three questions that I had was, is their tech actually powerful enough to really deliver better care at scale? That's question number one. Question number two is, can they ever become profitable charging the rates that they charge? Obviously, right now they're able to charge really low rates. Some people think that they're just undercutting the competition, which is not a great way to build the business profitably in the long term. Then number three, because they are so coupled with Medicare Advantage, how impactful is DOJ investigation to me? Because they're so coupled, it would be hard for me to take the risk, considering that's their main revenue driver right now is Medicare. There's a DOJ investigation. Those two things are coupled. If the DOJ finds a problem and all their Medicare money goes away, what else is there for them? So diving into their growth model really quickly here. So basically what they're saying in this growth model is that they are going to take all the data from their current customers, be able to run the machine learning models on that data, and then shoot that basically what's coming out of the models into the Clover Assistant. The PCPs within the doctor's office will then take those decisions and give better care to the patients. After that, the better care will then allow them to share superior economics, with members via low costs and better benefits. Then they will be able to keep driving down their own prices, which leads to organic growth, and they continue to, keep running the cycle. I think it makes sense from okay, yes, we can get more data, and then with more data, we can make better decisions. My struggle is between point 3 and point number 4 here. So I just don't see any data proving that, okay, because these PCPs can then make better decisions, they will be able to then share superior economics with their members. I would like to see some data that says, okay, here is how Clover Assistant basically influenced the decisions that were being made by the PCPs, and then here's how that directly related to cost savings from the customer. So that's kind of my general analysis of the business. I think longer term, it really just comes down to how powerful their technology really is. To me, it seems like it's nothing super special. And then again, that gap between 3 and 4, being able to do that at scale. So that is it for today's video. Thank you guys for watching, and I will see you all in the next one.